3 strategies to 17x your money. These are good. No, actually the best strategies to multiply your money, even if you don't have a large portfolio. You can turn $50 into $1,000. Not everyone has a big account, so check out this trade. If you make it to the end, by the way, I'll show you how to scale this strategy up. All right, so what you're looking at right here is a trade that's turning $53 into $947, or basically your total cost here is $53. I'm gonna explain to you this entire position in just a second, but this 53 bucks can turn into a total of $1,000. Right here at the very peak, you will make your maximum profit. That's a 20x gain, so I'm already over delivering, but check this one out. The stock I'm going to be covering is American Airlines. Now I've showed this example before, but this is truly one of the best stocks because the pattern on the chart is very predictable. So American Airlines has been coming down a whole lot since the middle of 2023. And then in 2024, basically, this stock is pulling back up very quickly. However, I will show you right now that there is a peak right here at 1459, and currently American Airlines is at 1458. So right now, I think that the stock is going to be stalling out. Not to mention, it's about to hit its Bollinger Band. All of this to say that we are hitting some resistance levels. Now, let me show you a small account strategy on American Airlines where you can capitalize on the stock not going past $15 and using a very small amount of money. Now, let me show you how this strategy is going to work. The first thing I'm going to do is I'm going to pick an expiration date that's out into the future. I typically go 1 to 6 weeks for spreads. It is pretty nice to go out on the third traditional expiration. So February 16. If you're watching this video in the future, this strategy is still going to apply. So the first thing that I'm going to do is I'm actually going to sell some call options. Now you will see that I'm going to create a custom order. So first I'm going to sell a 15 call, and then I'm actually going to buy a 16 and I'm going to buy a 14. Now you will see if I click, actually if I were to click continue, this would not be good because as you can see on the chart right here, it is going up into basically infinity and the maximum profit here is unlimited. Instead, what I want to do is I want to create a custom order, and I'm going to create one sell for each one buy. So there's 2 sells and 2 buys. Now you can see that I do think that American Airlines can come up, but at 15, I don't think it's going to rise too much more. So this is how you can make really good money. And specifically on this position right here, you can turn $20 into $80 in just 1 month. That's a 4x gain. And even if you do this 4 months out of the 12 months of the year, you're going to see more than a 17x return. Now, it's really important to understand how to manage this position. So let me go back to the chart right here. What can happen with American Airlines is several things. Let me go to the 3-month chart just to zoom into the picture. As you can see, it is swinging up very quickly. Now, American Airlines actually bouncing off of this $12.95 level, and it's over $14.50. However, at $15, you can see here how this orange line is the Bollinger Band. For me, I use a Bollinger Band that's 20 days and 2 standard deviations. All that means is that this stock is unlikely to go up past this level, and it's also further supported by this resistance right here at 1459, which it is trying to break at this very moment. Now, the strategy that I showed you can 4x your money because you're only putting in $20 and you can profit $80. But the important thing is you don't necessarily want to hold this position until expiration. So you may not actually fully realize the 4x return. Instead, what you may want to do is if American Airlines actually goes to 15, you will be rewarded in the short term. And at that point, I would look into closing this position. Now, the second strategy is even more interesting. So I want to show you how it works on Tesla. Again, for me, I go 1 to 6 weeks for expiration. That's just what I found to be the best because theta, which is the time decay of options, really kicks in and gives you that premium. And when you collect that premium, every single day it's decaying when you're selling options. And that's why it's really important to go 1 to 6 weeks because that decay, that is very fastest. Now check this out. This strategy is also very similar. It will actually profit if Tesla goes sideways. Now I want to show you the Tesla chart and why I believe it's going to go sideways. If I scroll down right here, you will see that Tesla has been about $274 back in June. And over the past 6 months, and even more than 6 months, this stock has really not went anywhere. Although it is currently below 262, the top of the Bollinger Band is 262 and the bottom is 232. So the strategy that I'm actually implementing right now where I'm making $2,355 is going to be the Iron Condor strategy. And I've actually opened up 2 of these. Both of them I have showed in my Discord community. You can get all of my trades by clicking the first link in the description. But let me show you how I would set this up. So I will go to Trade Tesla Options. Now this is really important because I'm looking at selecting the right strike prices. If you select the right strike price, then you will get the most amount of money without having to risk too much of your capital. Now this is one of the best small account trading strategies that can 17x your money or even more than that in a single year. Like with most stocks, you want to let your profits run. Although you do not want to get too greedy. One of the biggest mistakes that investors make is they get too greedy and they hold the position up until expiration. Now, most of the time I am holding until expiration for my larger account strategies, but for a strategy like this, what you want to do is, first of all, you want to start off with sell put. Now, what I'm actually going to do is I'm going to go low. That's because I want to be very out of the money. The further you are away from the current stock price, the safer it is. Now, again, I want to go to an expiration that is going to be a bit a ways in terms of date. Now, for this position specifically, I'm also going to pick the February 16 expiration. If you're watching this in the future, you just want to pick something that's about 30 days out. It can be 3 weeks out, it can be 6 weeks out. The most important thing is that you're actually just looking at the Bollinger Band and you have a sense of intuition for where the stock is likely to go. Now, for Tesla, the most probable scenario is Tesla will just go sideways. Unless there's some very big catalyst in the market, like an earnings event or some type of big news, this stock will likely keep going sideways because for the past 6 months, it has really gone nowhere. So I actually want to capitalize on this opportunity by opening up a 4-legged option. Okay, so here's how it's going to work. I'm going to start off by selling a put option. I'm going to go down to something that has a very low delta. Now, the reason why I pick a low delta is because a low delta gives you a high probability of succeeding on this trade. Now, check it out. The bid is 168 here, the ask is 171, and the delta is just 0.11. When I'm opening up a trade like this, I want to look at a very low delta. So I'm going to open up this position right here. I'm going to sell this option right now. And this is actually a selling strategy. The next strategy I'm going to cover very shortly in this video is going to be a much higher return. This is actually a safer return and a lower risk trade, and it can still really multiply your money, however, in the safest way. So the volume here is 413 and the implied volatility is 51%. So that's pretty good. I'm going to open up the 195 and I'm going to also buy the 190. This is super safe because it's very out of the money. And as you can see, the return here is actually not that high. Now, I'm actually pretty bearish on Tesla in the short term. So I don't think it's going to rise much, if any at all. So I'm going to sell something that's much more aggressive here at a 38 delta. The implied volatility is 45 and there's actually a lot of open interest. So I'm going to sell the 255. These are the calls, okay? I'm going to buy a 260. So now, as you will see, the returns here actually are going to be realized as long as Tesla stock stays between 195 and the higher end of things is going to be 256. So here the return is actually 194 where you're risking 300. This is actually a 66% return, thereabouts. And if you can do this every single month, then that's obviously going to compound. Not as much as the first strategy or the third strategy, but this is still an amazing strategy. And I wouldn't even close this position unless Tesla really runs up, which again is very unlikely given the chart, unless it just shifts momentum. And as you can see right here on the RSI, it is not that likely that it's going to just shift and go back up. And even if it did, it would still probably be in the middle area right here at 247. However, our calls, the strike price here is actually 255, so we're more than good on that. As an option trader, my assumption typically about the market is it is going to move sideways, and that's because after working at Goldman Sachs and getting my finance degree, I realized that the stock market is typically rising in the long term, but in the short term, if a stock is fairly expensive, it is not likely to move up unless there's a lot of momentum behind it. So step by step, I want to show you the third strategy, which is going to be on Palantir. This is a really good stock because Palantir specifically, if we look at the chart right here, has actually had a very big bullish run, but now again, it's also trending sideways. So I'm actually going to show you a put strategy where you can put in very little and literally squeeze out multiple times what you put in. And this is going to be pretty insane because I've seen my students do this from time to time. Obviously, I would not dump all my money into a strategy like this, but you can absolutely get a huge return that's 15, 17, 20 times on your money and in a very short amount of time. The profits are literally insane on a position like this. So let me show you how this is going to work. I actually currently already have a position that I am slightly down on, but my options are making money. So that's good. My options typically make money even when the stock goes down. Now let me show you how this put strategy works. And there's actually several put strategies I would run on Palantir right now. So in my opinion, Palantir is not likely to go below this area of $13 per share. And that is just because, as you can see right here, back in June of 2023, there was a very good support level and then another double support level back in August, and then another double support back in September. And literally now in 2024, I think that Palantir is going to have a pretty good return. And I don't think that it's going to fall below $13. In fact, I think it's going to stay around the $16 mark. It could go up, I'm not sure, but the strategy that I'm going to use right now is actually going to have a very big benefit, even if Palantir just trends sideways. So I'm going to show you something like the March 15, which is about 2 months away. Again, you can do this 1 month away. I'm just going to choose 2 months away just to show you how this strategy could work with a 2-month option expiration. So now I'm going to go ahead and sell a 15 put. And actually, let's just say we're a little bit bullish here and we think that Palantir is slightly going to rise. I'm actually going to sell the 16 put option, and I'm going to go ahead and actually buy the 15. Actually, instead of buying the 15, the way to make this strategy even more profitable is if I go all the way down to say like 11, okay? So I'm going to go ahead and buy the 11 put, and then I'm going to buy the 18. Now, the reason why I'm going for 18 is because I do think that Palantir could slightly rise, but even if it were to rise to 17, I'm just kind of being a little bit safer here by going for 18. And again, we do need to create a custom order, because if we don't create a custom order, then this is just a very bearish strategy, pretty much like a ladder put strategy here, where you're making some initial money and then a lot more money as Palantir falls lower. But obviously that's not what we're trying to do. This position, if you want to properly set it up, you want to have 2 sells here, and obviously 2 buys. You're going to have 1 buy at the 11 put and then 1 buy at the 18 put. As you can see here, this is a very interesting strategy because even on the upside, you're still basically covered. And right here, Palantir stays pretty range bound. You have a peak expected profit of $203. And here you're putting up 297. So again, you are getting a roughly 66% return. But the beautiful thing here is if Palantir goes up, which is my assumption, you are actually going to profit. Now, one more thing that you could do is, I'm not sure if you can actually have 4 legs here, but I can include something like a $20 call. Yes, this could work right here. As you can see, something like this. And actually, I'm not even sure if I would go for 20 in the short term. I would pick a different expiration date. So let's just say I'm going to go a little bit longer. Let's just say 6 months. If I go for something like a $20 call option, you will see here that we have a really big upside. And this is a really interesting pattern because your maximum profit here would be unlimited. And honestly, like if Palantir were to go past like $25 per share, you would start to experience a 2x on your money, very, very quickly. And you can actually close out this position in say 30 days. So if Palantir were to have a pretty big move, you could exit out of it for around these areas of $20 per share. But my main goal is, say that 1 month has passed by and you basically have a profit of 124 right here. That's a 20% return, and you can honestly get that in even less than a month sometimes. Literally, if Palantir were to stand still for a couple of weeks, since these 2 options or these 3 options are actually expiring in March, you can actually experience a very short-term big gain, and then you can cut the position early. There's no reason to actually hold on to a position, longer than needed, especially for buying strategies like these. Since you are buying some of these options, it can get really complex, and that is why some of these strategies are more difficult to manage, and why they're not my preferred #1 strategy. However, this is one of the best strategies for really growing a small account super fast, although again, hard to manage. Now, the profit that I'm typically going after on a buying strategy is going to be anywhere from 10 to 20% in under 30 days. But honestly, another strategy that I use, and this is going to be a bonus strategy, is going to be the PMCC strategy. So I would do something like, let's say I'm going to buy a call at $18. Okay, now this is really interesting because this is a different way of doing things. Typically, when people buy leap options, they go for in the money. You can also do out of the money, so I can buy an 18, and then in the shorter term, I can sell options. So let's say I go for slightly less, like 3 months out, and I go to actually sell a call, and I sell something like, let's say the 19 strike price right here. You can see how you get a very big actual profit here, where you are more than doubling your money. So you're putting up $167, but you're making $180. So you can actually double your money here. This can really happen in a shorter amount of time, because although this option is expiring like quite a bit out, and so is this one, you're not gonna realize the full profit. But if Palantir stock goes in this direction, these options will start to profit very quickly. And say, for example, that you make $80 on 167, so you get a 50% return in 3 to 6 weeks. What I would do is I would just cut that position, because again, I don't want to get greedy. If I get a 50% return in 3 to 6 weeks roughly, again, it depends on a few factors. Like, you definitely want to look at the technical analysis. And for example, if the stock goes up and the RSI goes from like 42 to 62, then I know that the stock is kind of overheating. And if I made a good enough return in a short amount of time, it's basically an emotional decision where I will decide to cut the position. Now, I know a lot of people think that it's a logical decision, but in fact, you want to think about it in multiple different aspects. Now, I also want to use technical indicators that I don't commonly discuss called the Ichimoku cloud with you guys. And I want to show you an example that I was 100% correct on this exact stock, where I made so much money in the past 5 months in a row, actually, using the Ichimoku cloud. So pay attention to this example if you really want to get this strategy correct. I want to show you something really interesting and really new. So with Palantir, what I'm looking at right now is an indicator, the Ichimoku cloud. And essentially, Palantir has been inside this cloud for some time. Now, of course, if you're watching this video in the future, you can still apply the same principles of these 3 strategies that I'm going to show you today to the future. Okay, so taking a look, it's inside the cloud, and for me, what that means is it's likely to continue trading within a specific range. So I've done a lot of research into Palantir. Obviously, it is a good company long term, but in the short term, I do think it's going to stall out. And specifically, if I go to the indicator RSI, we're also going to take a look that the RSI is somewhere in between 20 and 80. So I believe that Palantir is going to stall out for the short term. Now, if a company like Palantir is going to stall out, there's actually a phenomenal strategy where you can make tons of money, and I mean 25x return. So let's open up this position. It's going to be a little bit complicated, and I will warn you that this strategy is a bit harder to manage. There's a whole lot to it. However, if you get it right, obviously there is some really, really huge rewards. So what I'm going to first do is I'm going to go to sell. I'm going to sell a $15 call option. Now, what I'm going to do is I'm going to buy a call option. I'm going to go down lower. Okay, so I'm going to go down into the 13.5 strike right here. And I'm also going to go up into the 16 strike right here. Now, this is going to look a little bit weird because the position setup is not ready. And basically what I'm doing right here is this 15 strike is actually the anchor. It's the top of the Christmas tree, if you will. Is the very peak of where you think this stock is going to trade. And I picked 15 again, because when I look at the technical analysis, I really think that Palantir is going to stay within the cloud right now. So if I go to custom order and I go to customize, you want to make sure that you have an equal amount of sells for each buy.